All right, guys, welcome to the next class. Today we're gonna see the order blocks and imbalances. Very interesting topic. Now let's see how it works. Let's see the theoretical part. So let's see the definition of an order block. First, we're gonna start with it, then with the imbalances. So they are order accumulation zone, which the price has not yet mitigated or reached, and where there is a high probability of reaction. Okay, when I say mitigated, it means price haven't reached that point again. Okay, and it means it doesn't make it efficient, in other words. Okay, now generally these zones are order blocks and imbalances on which we can focus orders to generate accurate market entries. So you have seen the theory, maybe you have listened about the demand and supply theory. All right, maybe that rings a bell. Something that we work with it in this course as well. But we take as a say we spot always what is the order blocks or the imbalances, because these are zones which are or causes really high reactions or high probability of reactions. Okay, now understanding where they exist and how they work is what I want. I want to teach you today, and you're gonna learn today. But let's understand, where do we find them? Okay, first of all, and how does it work? Okay, so in the bullish fractal, remember the fractals, correct? Or impulse, it is the last bearish candle, or sometimes it could be the last candle, okay, before an uptrend impulse. Okay, the recapitalization or mitigation is when the price will take its inefficiencies. Okay, now, what is the meaning of this? When you have a fractal, in this case, we have seen here a fractal, or how a fractal is being created, right? The bullish will find here an order block, where always the last bearish candle, in this case, the red one, okay? Or it could be this green one as well, okay? Now, what happened here? What is happening here, okay? This will become a zone of high probability of reaction, and then the price can come here and capitalize it or mitigate it. So the explanation behind why this occurs is because market is moved by huge companies. They are trading millions of dollars. Okay, and one candle could represent millions, 20 million, 30 million of accumulating orders. Okay, so as an example here, we have, for example, this impulse has been created by, I don't know, certain hedge fund company by at the market for $400 million, pushes the price up, and then some other hedge fund company, whoever, a big investor, push the price down by selling it. Okay, now what happened with this? This is called inefficiencies, which means many people start buying here at these points where I'm highlighting here. Okay, it's inefficient because the price in this business, some win, some other lose. As simple as that, right? We're learning to become the ones who win. Okay, people start buying at this point, and this creates something that is called inefficiencies, which is called the market creators, the market makers don't want us to win money. So the next movement they will do is just make a retracement, make us lose money, in other words, okay, and take their money back. Okay, and that's what it means to be, or to make the price efficient. Okay, that's what I'm referring to when I say the price gets efficient. So let's see now. In this moment, this is what happened. Okay, so they pushed the sell. Okay, they sell the 300 millions here, and then the price get to this, which is the order block. The part which has been not mitigated, it comes here, and in here it has a reaction. What is the meaning of this? All the people that were buying certain point, well, were out of the market. They take them out of the market. And then when they take them out, they keep pushing out. They made the market efficient. In other words, they don't many people win money, right? So this is super fundamental for us, because if we understand when the price will have this type of reactions, or where is the correct order block, then we will understand where to buy or where to sell, right? Perfect. And this is an example of a bullish fractal, okay, or in a bullish impulse. So the order block will be the bearish, or it means the last candle, this one, okay, the last candle, the bearish candle, the last candle before the uptrend impulse starts. Okay, so just if you see this example, this image, now this has been a mitigated order block, which means, okay, tick, mitigated. But what happened after that? This will be the next order block to be mitigated, this way. Okay, and I mark it here. Price may go up at a certain point, do something else, and it could go down, react here again, and keep going up. Sorry, it doesn't look so clear because of the color, but this is how it works. Okay, so this will be the next zone of to be efficient. Okay, why does the price makes this? Again, the price is a process of buyers and sellers. Okay. So, and in this business, you need to understand when to be a seller or when to be a buyer. So, for example, if you start like buying this at this point, you are already losing money, all right? Because in certain moment, the price could push down, enter again to the not mitigated zone, and keep pushing up, right? So you become a loser, as simple as that, okay? And everyone who has doing trading at a certain point was a loser. Myself was one for a really long time, but now I'm able to teach you this, okay? Excellent. Now let's see the example of a bearish fractal, same story. It is the last bullish candle. Now it's bullish candle, okay, before the downtrend pull and recapitalization or mitigation is when the price will take its inefficiencies. Happened the same. Okay, they were selling here again for 100 millions. They just pushed it up by buying certain millions. They let here the order block. We mark here the order block zone, which is the last bullish candle before the next bearish impulse, and then we will wait here to like trigger or just pull the trigger to put our orders, okay, and sell in this example. Okay, in the previous example was buying, this one is sell. Now we're gonna see in detail in the market how it works, okay, but this is in few words how the concept of order block works. Okay, it's not really a big thing, but since the market is just a process of seeing millions of candles, we just need to be very wise enough to recognize what are the order blocks that works and what are the ones that doesn't. Okay, that don't, excuse me. Okay, let's see, let's keep moving. So most of the times, okay, the order blocks, okay, the order block zones, okay, some sensible zones. It has sensible zones. What are those zones that makes the order block sensible or sensitive in certain way? It has four main zones. The first one is the candlestick, the candle wick. So in the candle wick, sometimes the price, you will see the price will touch just the candle wick and and it's already mitigated, right? In other the scenarios, you will find that is the beginning of the body. The beginning of the body will be like the second way which the price will mitigate another. Okay, and the one that I like the most and the most beautiful, let's say, one to see is the fair value. Fair value means that it goes to the 50% of the candle and the price keep pushing out. Okay. So, for example, in these examples we have here, okay, just based on the explanation, the market may have a reaction in a sensitive area of the order block. In this example, the price just came here to the beginning of the body of the candle, correct? But sometimes the price may do the next. For example, it could do this. So with a candle wick, it touches the fair value, which is the 50% of the candle, and then it has a really hard reaction, which in my personal point of view, this is the most beautiful, I like to say it, the most precise, much more understandable reaction of the price. But remember, not always it happens like that. The price is not the same always. Sometimes it can go to the fair value, 50% of the candle, or simply it could just touch one of the sensitive areas of the candle wick. Could be the candle wick, the beginning of the bot, or the fair value. Even sometimes it could go even push lower than it, okay? But as far as the price reacts on the zone which we are expecting it reacts, we are fine, okay? Because trading is not like math, okay? In math, you always have a precise result, correct? But in trading, sometimes that type of precision, you won't find it. Not always, okay? Sometimes it's so nice to see it, but you just need to expect and be open enough to understand that the price is not always the same, because not the price market is an everyday thing. So not everything is the same day. And that's something we need to be very conscious enough. Okay. So once we have understood this, which is the sensibility of an order block or an order block, we are ready to go to the next, which is refining order blocks. Okay, that this is one of the homeworks we're gonna have. So let's see. This is refining order blocks and stop loss. Some useful when we're gonna use the order blocks. You're gonna see why. So this seeks to have a smaller stop loss and consequently have much larger risk benefit. Okay, risk reward. Okay, or win ratio. Swing high is the highest part of the price. Okay, this is just something I just wanted to add. Okay, in this case, this is what we're looking for. Okay, that for example, we will have a candle of, I don't know, 1 hour, 1 hour here. This is the red one. But then if we go down in 50 minutes, we go to a lower time frame. In 50 minutes, we find a smaller order block. inside the same 1 hour order block. So now we're gonna take this as a zone. But sometimes we can go even further. In 5 minutes, we'll find a smaller order block inside the 1 hour and the 15 minutes order. Okay, we took it or we take it, right? Now the zone gets precise and precise. So the smaller the order block, the precise the order will be, the smaller the risk we will have, because we'll have a smallest or this and a smaller stop loss. But, and this is something we have to be also conscious about, is that if we refine it too much, there is it's likely that the price do not enter to our order, because it's so refined that maybe it just entered to the 15 minutes order block. If you have the order in a 3 minute order block, the price is not able to reach to that point and it keep pushes out. Okay, so this methodology or in this strategy, okay, a maximum of 12 pips of stop loss should be placed. Personally, that's what I put, maximum 12 pips of stop loss. Okay, just if the block is and that's the biggest stop loss I put. When we start like executing properly orders, you will understand this. Okay, our entries according to the methodology or this strategy will always be in the week of the candle. Okay, once we refine the order block, okay, in this way we ensure that the price activates our order. Sometimes I prefer to put the order just in the candle week, just here, because I wanted to risk a little bit, like 2 or 3 pips more, and guarantee that my order will be open, because sometimes we have a spread, and when there is a spread, also the order do not open. Okay, when it's that precise, because I'm teaching you a strategy that is extremely precise, you will see that sometimes price do not open your orders because you're being super precise. That will be like a prize for yourself, like, hey, I'm doing something well, but in that moment it hurts because you say, geez, I'm losing. Okay, so this is it about order blocks. Order blocks, just to summarize, they are accumulation of orders that are placed either in the beginning or in a demand zone or a supply zone. We identify those order blocks are the last in, if it is bullish, okay, if it is a bullish order block, let's go, let me check briefly. If it is a bullish order block, remember it is the bearish candle before the uptrend impulse, and if it is a bearish order block or in a bearish fractal, we have is the bullish candle before a downtrend impulse. Okay, that's it. Now, because this is also very important, we have a concept that is called imbalances. Okay, so let's read the definition of the imbalances and inefficiencies. Okay, so inefficiencies or imbalances, okay, are also known as imbalances. You may find some traders call it inefficiencies. I call it imbalances. It's easier for me to understand it this way. So they are price gap, okay, left when the market moves impulsively in one direction with little or no opposite order. What does it mean? Is when the price has a really strong movement and there is no retracements. Okay, this occurs when the price fails to efficiently buy and sell orders, creating areas where the liquidity is lack. Let's see this example. We have here an example of a swing high, swing low, like the beginning of a range. But now what I want to point here is the next. I would like to do the next as well. So following the previous explanation of order blocks, remember that the order block could be when we have a bearish impulse, which is this case, is the last bearish or bullish candle preview or prior bullish impulse or down. Now, following that explanation, this and this will be our order, a little bit big, very big, and all this zone will be a possible zone of reaction, correct? But since this movement of the price or downtrend movement was super strong, okay, the price left the net, which is imbalances. Okay, imbalances are these spaces. So this, you see this gap, the gap that I'm highlighting here, we're gonna see how to identify it in a minute. Okay, or it's like gaps, very big gaps that we see in the price, and are not the gaps like space, like where is no candle. This one when I'm highlighting here, but in the next slide I can explain it further how it works. Okay, look, I just want us to see how the video ends. Okay, so in this case I'm just highlighting the next. Here is another imbalance that is created here, and I'm referring to this space. Is this space? There was no opposite order that went back, that were pushing against the price, as well as this. Look, there is no orders that went back, like make it a retrace. Okay, but eventually this had a reaction, like I'm highlighting here, for example. So if you see when I'm putting or highlighting all the orders here in the 50% had that reaction. Okay, we're gonna understand better once we see the next. Okay, this is the same explanation we have. So just let's read it briefly. Imbalances are inefficiencies left in the market as the price moves. And the only inefficiencies that are the market that matter to us are those that are in the extreme of the impulse of the movement. So it means in the very beginning or at the very end. Okay. We always place or in at the sensitive tip of the imbalance candle. If the order block is smaller than the imbalance, the imbalance candle and contains the imbalance, the order block should be taken again as well. However, if the order block is smaller and it does not contain an imbalance, then the imbalance candle should be taken even if it is larger. Okay, let's see here what I'm referring to. Here we have like a beginning of a range. So again, swing low, swing high. Can I move my camera? So we have here the swing high, the swing low. Then we have here the beginning, the liquidity taken, and after that, the break of a strike. That is clear. Now, what we have to take into account here is the next. We are going to analyze first thing the order block and then the imbalance. So let's see brief, and I want you to identify just without telling you where the imbalance is. Okay. You see the space? That space is what I'm referring to. That is the space between the imbalance that we have to realize exists. Okay, that would be an imbalance. Now, what I'm saying in this explanation is that sometimes when we put an order, we need to acknowledge that the price may react even in the imbalance or in the order block, because just above this, here is an order block. You see, this is a bully, this is the bully can, and then we have a downtrend movement. So this is an order block, correct? Now, what may happen? Many things may happen. Look, we have here an order block. This will be the order block. All right, we change the color, please. Now, after this, what may happen? Two things. Until the point we have a market is here, the price could go here to the imbalance, enter to the imbalance, and go down. Or the price could go up to the liquidity of the imbalance, enter and mitigate the order block zone, which is this one, keep going down. Okay, so that's really important. Okay, this is really important to understand about the imbalances and the order blocks. Sometimes to guarantee we'll have a proper entry, we take either both the imbalance and the order in order stop loss. Okay, let me teach you this, because this is actually the most important thing about the imbalances. Okay, this is how we recognize an imbalance. First of all, the candle order block before the imbalance is also taken into account because it's a high probability of reaction. We already know that. Okay, and the inefficiency or the imbalance can be identified after the third candle. What does it mean? Look, we have this, which is the order block, very easy to identify. I'm pretty sure you can identify an order block, which is this. But to identify an imbalance it needs a little more of practice. We will have, this is the candle one, this is the candle number 2, and this is the candle number 3. If you pay close attention, okay, when the candle wick of the first candle finishes is here, I'm just highlighting it. Then we have a bullish impulse, okay, and then we have, which is the second candle, and then we have the third candles, and in the third candle still the candle wick of it just get to this point. What does it mean? The price left a gap between this candle wick and this candle, and here all this area it's called imbalance, okay, or inefficiency. Okay, sometimes when people understand the concept of order blocks, they're always waiting for order blocks for the price to have a reaction, and sometimes the price get really close to the order block and then just go down or just keep going with the price direction. People, we don't understand why it happens, but what really happens is the price reacted in an imbalance. For example, we're gonna see more examples about it. If the price is going down in this case, and it's what I just explained before, it could react to the 50%, okay, the 50% of the imbalance and keep pushing, right? Some people get like, why the price did not get to my order block? Because it reacted in an imbalance zone before or prior or that order block. Or it could just have a small reaction, enter to the order block and keep pushing. But this is something we need to be ready and aware of, okay? Because it happens too many times. I wouldn't say always, because not always happens, but too many times or too frequently happens, okay? This is how we identify for imbalance, okay? And this is why I was putting in this previous example, the imbalances here. Let's pay attention here. Look, in this example that we are seeing here, look the next. We have a first order block, which is in this area, right up here, okay? This is an order, I'm sorry, this is the order block, okay? The last bullish impulse, okay? What happened? You see the next, guys? You see this? we have this, which is the order block, but the order block was already mitigated by this candle. Why, Manuel? Why was it mitigated? Remember that the order block has sensitive zone. The price went up here, reacted to the body of the candle. See here the body of the candle, the green candle, and then it keep pushing down. So this order block is not valid now because it has been mitigated. So the next valid order block will be this. That's why I explained it. This will be a possibility, okay, of reaction. Now, what happened here? The movement of the price was so strong that it also created an imbalance. And here is what I want you to pay attention. In regards to the previous explanation, we said it means that we have a number one candle. This is the candle wick number one. This is the candle wick number two, which is a super big one, you see. And then we have a number three candle wick. This is the green. Okay. Now you would say, Manuel, but why don't you take it from this one, from this candle? I'm just taking the one who has the space. Sometimes it could be the third one, as in the theory. It could be the fourth, like in this example. I just need to have very clear the space that the price has left. So in this example, this candle wick is here, and this candle wick is here. Use the Fibonacci tool, or we just highlight this, and we find an imbalance, which is the 50%. Now pay attention how the price has reacted either here in the imbalance or in the order. So the price has done anything, but in this moment the price entered to this zone. Okay, it entered to this zone. That was the imbalance has been mitigated or has been efficient. And what happened after the reaction of the price keep pushing down? You see, that's why it's important to identify in this case imbalances. But I think it was stronger. That okay. This is it. Okay, imbalances are really important to identify as well as order blocks. If the theory part has not been so, my suggestion is just stop the video here and try to watch it again. If you want, you can read all the presentation and then go with me to the next part of the video, which is the market practice. Okay, we're gonna do the next. If you have any further questions, you can send me the question in the Q questions in this course. You will find some questions related to order that some of my students has left, and I have already answered some of them. And of course, we have a home. We need to identify 10 imbalances and or more of on or in a 4-hour or 1-hour time. Okay, we need to highlight the swing high, the swing low, and the so here we are mixing the two classes, which is high time frames, lower time frame, and now order blocks and imbalances. Let's see an example of this, and let's get more understanding about the imbalances.
How's been the class so far? Cool, right? What is not cool? That most of the people who's watching this class are not subscribed to the channel. So please guys, subscribe to the channel and hit the notification button. With this, you're gonna help my community grow much more. So let's keep watching the explanation in the market. Let's go.
We are now in the practice session. So what are we gonna do? We're gonna do 2 exercises. I want you to do the same and do as many as you can. The exercise number 1 will be refining order. If you have, this is the first you know about the concept of order blocks, please do this exercise many times and then try to do the imbalance. This is a little bit difficult to recognize. Okay. Second exercise we're gonna do, it will be find imbalances and order blocks in the price, finding them because you already know how to find, and then understand the price reaction. So because all this strategy you're learning, I want you to validate on you. It's not because this is working and now you just have to follow it. You need to corroborate on you. You need to say, okay, this really works. You need to see how it works. What time frame is this one? This is daily time frame. Okay, we're gonna do an example of refining order block. I'm gonna show you how it, and if you want to use the same tools I use, it will be really great. Okay, now look at the next example that we have. This is the Euro USD example. Let's try to apply everything we have learned so far. So this we're gonna try to identify. We're gonna recognize if this is a strong low or a weak low. Remember, we are already know how to do it. So this is the positive strong low, but we still do not. Let's try to recognize if it is. Remember that we have to recognize first if there is a swing low and then a swing high. In the swing low pattern, we'll find it here, right? This is the swing low because it's the low candle, and the one on the right is higher, and the one on the left is also higher. So this is the lowest. Perfect. And then we have to identify if after this there is a swing high, which is correct. Here is the swing. Okay. In this swing high, this is the highest point of the market. The one of the left is lower, the one of the right is lower. Swing low is created, swing high is created. From the swing high, the liquidity is taken, and we can like this. And now from this point upward, we wait for a break of structure. Until this point is not break of structure, but we will have to wait some days more, and then we have here a bust. So after this, we can corroborate this is a break of structure, and definitely this is low. Strong low, strong low, strong. Here it is. Perfect. Nice. Now, where do we find the order blocks? Okay. The order blocks that are more efficient or has more reactions in the price are the ones who you find either in the beginning of a range or at the end of a range. Okay, because we're not gonna enter into details because it will be for further and more advanced class. We're just gonna stick to the explanation we were talking about. It works. So I use always the iron. These two, okay, this the magnet. I put it, and then what I do is the next. Why? Because I can put here the beginning, exactly the precise beginning, and then we have the 50%. This is a daily order. Okay. Now we can see the next. Let's one of the exercises was, of course, analyze and then see it. Okay, see it in percent is react. Order block or daily order block. Okay, order block or daily order block. Perfect. What happened here? The price reacted in the candlestick. You see in the reacting. So this we could say this order block work. We are doing the exercise of refining order blocks. So what's the idea? We're gonna try to find in this order block daily more order blocks in lower time. Why? Because with that we will have more refined or more precise order. So if you see now I put it in 4 hours, and in 4 hours you see the remaining candle. Now what would it be the 4 hour order? You will I know I'm gonna give you a time to think. I'm gonna put here some numbers so you can let me just what would be the order block. So it could be number, which is this one. I'm gonna put it number maybe this maybe number. So the answer for this, because we're just doing the exercise of refining, it will be number one. Okay, when you say, hey Manuel, but the number three was the one who had the reaction to the price, but that's a topic of further class. Okay, so because we refine in this case, this would the 4 hour or the 4 hour order block. And this is the bearish. This is the bearish or the last bearish candle before a bull impulse. So this will be 4 hour, the 4 hour order. Perfect. Now let's a smaller time frame. Let's go to 1 hour. In 1 hour, this would look very different. Good. Daily time frame, super. This is just for the sake of the exercise. And again, in 1 hour will be this red candle. Here it is. This is the last bullish candle before a bull. The last bearish candle before a bullish. Here it is. I'm sorry. No, this is correct. Here it is. Okay. And this will be the 1 hour order block. Sorry, 1 hour order block. Okay. So this is the first exercise I want you to go daily time to 4 hour time to 1 hour time. This exercise is just for the students which you're new with the concept of refining order blocks. So this, if you can see, look how incredibly big an order block daily is in 1 hour time frame. And we do trade in 1 hour. The importance of knowing that this is an order block daily is that in certain moment the price will get in a which was this day and the push. This is it. That's the first exercise. So if this is the first you know about the order sensitive zone and refining order, this is the exercise you should do first. Next. Now, for those who are more advanced, we're gonna do the next exercise, which is the next. This is the exercise one. Okay, refining order blocks. Exercise two is find imbalances and order blocks and understand the reaction. Okay. But we're gonna do the next. This is one of the previous exercises we did in the previous explanations. For you have seen, I have done. But look how interesting it is. Here we have already one strong liquidity take. It was taking the liquidity, then break of structure. We have this is strong. Now, by using this strategy or the explanation of the order block is in this case we say bearish. This is a bearish, and you say Manuel, but this is not. Remember that the color here doesn't matter. You just can't change it. But in this case, it's just the last bearish candle because we was the one who was the low before a bullish impulse. Look the reaction. Look the reaction. Where did it take the liquidity or make it? How did it make it efficient? By entering in the verbal. If you still struggle with some of the concepts, I'm saying again, watch the video. There's no problem. You can see it as many times as you. Here we can see very clearly If you remember in the first when I explained to you high time frames order block, we analyzed this and then we analyzed that this was the ending of a range. And then I said to you, but the market respected the strong. Now here is the why it respect because enter in order block, daily order, and then it keep pushing. So the homework will be let's try to analyze, for example, the beginning of an impulse and also the ending of an impulse and how the market reacts because it does have react. Now look in this. Now we're gonna analyze the order. We have this is the last bull candle, candles before a downtrend move, and now looking at what happened. This is the zone, the order, the an order block, so the order block daily. What happened with this order of the block daily? Look, wow. Oh, the price did enter it. We're gonna change the color because it's a demand zone. We're gonna understand that the price enter here. Oh, sorry, this is so the price enter the supply zone. This is demand and changing the color. Okay, what happened? The price enter 50% of the order and it had to a small reaction. Why this reaction was that? Because we're in a bullish impulse. All right. So that's why the price had that small reaction, but it did had a reaction, which means order block works. Sometimes they have a really big reaction like this, but some others it just has a small reaction like that because we need to understand the direction of the market. And if we know the direction of the market, we will understand that some order blocks may have better reactions than others. This this is it. And now you'll say, okay, Manuel, what about the imbalances? Imbalances are very important. So if you are, this is my students which are advanced, all of you are advanced at a certain point to understand all these concepts. Once you have mastered this order blocks and reaction of it, you have a third homework. We will be that it will the imbalances. Okay. Now for the imbalances, I just want you to identify strong price movement, very huge candles like we're perceiving in this moment. Look at it. Look, let's keep follow the behavior of the market. How does mod react? Keep pushing. Okay. It keep could go. Maybe some people would think at this point it's now time to sell, but what happened after? A break of the structure. Now look at the look. This is a very perfect for the topic of the imbalances. Now, can you see the imbalance here, guys? Can you see it? Do you spot? All right. So this is the candle number. This is the candle number, and this is the candle number. Where is the imbalance? Remember that the imbalance is it is the beginning here of a candle of the candle number, and sorry, the end or beginning doesn't matter, right? Of the candle number and the beginning or the ending of the candle. So in the candle number 2 is where the imbalance or inefficiency exists, right? And practically like the drawing example I put to you. And now look at it. This is another. You say, Manuel, wait, but I am seeing that there are more imbalances in the price. Why is that? You're very clever, my friend, because there are more imbalances. Look, here is another imbalance. Look at you say, okay, but what is this? No, the candle number 1. This will be the candle number 2, and it's the candle number. And you say it will work as like that with all. It will to identify what is the correct something. That's something we will understand further classes. Okay, in further, I think you have enough information. Let's keep analyzing. So in the next imbalance is this one. Okay, this is the next imbalance. So this is the candle number 1, candle number 2, candle number 3. Now from the beginning of the candle week of the number 1, we reach to the top of the candle number 3, which will be because I'm using a tool. That's why it looks like that crazy. But this is the imbalance. The price entered to the 50%. It just entered like this. Probably in the future, when the euro goes, it may react in this imbalance. And we can keep observing, analyzing the market, and find these spaces, these imbalances. Here is another big imbalance, and that's the point of understand the reaction of the. This was an imbalance. Like so, this will be the candle number 1, candle number 2, candle number 3, and here is the imbalance. Okay, and this is a question maybe some of you will ask, Manuel, what is that tool you're using? This is the Fibonacci. How do I put it? I mean, this is the parameters. 0%, 0.5%, 100. Okay, and I delete everything. I don't use numbers 50, 80, 85%, 68%. pure analysis, very precise, very straight to the analysis. And in this case, we can perceive that this imbalance really had a reaction because the price entered more than the 50%. It go further, go down, and it keep. Guys, this is a long is one of the most valuable content so far, and all of them have really valuable content. But I hope you can appreciate if you refine and doing the exercise of finding order blocks in the beginning and in the end of it, and second, find imbalances and try to understand the market reaction will be key because you will training. Imagine that trading is like going to at the very beginning your mind, you are just like looking to some candles go up and down. Actually, you're not understanding more. After you train your eye with this type of exercise, definitely you will be much more used to. And of course, from my point of view, one of the clearest strategies it just use some lines. You don't have to use indicators, things, and you will see the effectiveness of this in further videos. This will be all for today's video. Hope it has been enough clear. If you have further questions, remember Q&A section is there for you to make your questions, or if there are more questions, order blocks and imbalances. This is everything for today, and I see you in the next.
Hey guys, do you have any questions and you want me to answer them in a live session? It's possible. So you just have to click on my social media and there join to my Telegram community. There I'm gonna keep posting some of the possible days in which I'm gonna make a live session and I can answer some of your questions, right? So don't doubt to do it and join to the community. See you in the next video.